In my personal view, there's a strong likelihood that the crypto bull market might commence as early as 2024. I've identified 7 compelling reasons, supported by data, research, and evidence, which I intend to share in this video. Let's delve into them. Reason number 1. I believe the bear market has already begun. Let's examine the charts. A telltale sign of a bull market is the confirmation that the lowest point of the bear market has been reached. If we look at what transpired in November 2021, following Bitcoin's record high of $69,000, we observed a significant decline throughout 2022. It wasn't a mere 10%, 20%, 30%, or 40% drop. It plummeted by over 77% until it stabilized around $15,500. Now, nearly 2 years have passed since the bear market's inception. Many analysts now think that Bitcoin hit its low point in November 2022. Unless Bitcoin falls below $15,000 again, it signifies that the bear market's lowest point has been reached. The graph shows the bear market's low point represented by the orange line, while the green line illustrates Bitcoin's upward price trajectory since then. I believe that, barring another unforeseen black swan event, it's improbable that Bitcoin will revisit its previous bear market lows of $15,000. In fact, at the time of filming this video, it would need to drop over 44% to retest those lows. If, on the other hand, Bitcoin does drop below and reaches that support level, it would present a terrific buying opportunity for long-term investors. Reason number 2. The SEC, U.S. Securities and Exchange Commission, is becoming less of an issue. The SEC's classification of Bitcoin and Ethereum as commodities, rather than securities, is a groundbreaking development. This shift places these 2 major cryptocurrencies under the Commodity Futures Trading Commission, CFTC, jurisdiction instead of the SEC's. This is fantastic news because the SEC has historically been resistant to cryptocurrencies and subjected blockchain companies to unwarranted scrutiny. On the subject of the SEC, there have been several recent victories and updates. In the legal battle between the SEC and Ripple, XRP, after over 2.5 years, the judge ruled in favor of Ripple Labs, affirming that XRP is not a security. The SEC's motion to appeal this decision was rejected by the judge on October 3. The SEC had also opposed Grayscale's bid to convert into a publicly traded Bitcoin ETF. However, Grayscale's legal action led to the reversal of the SEC's decision, and a Bitcoin ETF is now in progress. Additionally, the SEC's lawsuit against Coinbase and Binance accusing them of operating as unregistered national security exchanges, brokers, and clearing agencies demonstrated the growing resistance of crypto companies to the SEC's regulatory overreach. During the previous bull market, the SEC imposed limitations that hindered the market's potential growth and didn't protect many participants. There were numerous exchange collapses, bankruptcies, scams, and influencer-driven pump-and-dump schemes. This is why our channel emphasizes transparency and was the largest crypto channel during the previous bull run. We never accepted offers of millions of dollars from projects, and we prioritize honesty, transparency, and justice. Reason number 3. The next Bitcoin halving cycle is on the horizon. While many people believe the halving event is 2 to 3 years away, it's expected to occur in either Q1 or Q2 of 2024. Historically, Bitcoin's price has seen significant positive impacts after each halving event. Following the first halving, Bitcoin's price surged by over 9,000%, marking its first all-time high above $11,000. Subsequent halvings resulted in price jumps of over 3,000%, pushing Bitcoin beyond $119,000. Typically, all-time highs occurred around a year after each halving event. Following historical trends, if the halving event takes place in 2024, we can anticipate a new all-time high around mid-2025, if not sooner. During the bear market, we've witnessed many prominent cryptocurrency investors continuing to accumulate. For instance, MicroStrategy has acquired tens of thousands of Bitcoins, even during the past year. As of September 24, they hold approximately 158,159 more Bitcoins. These early investors, who held their assets in cold storage, have begun accumulating again, potentially signaling an impending price increase. Reason number 4. There's a growing sense of optimism and a reduction in fear in today's markets. This doesn't mean the broader economy is in a dire state, with housing market crashes or car market collapses. Despite widespread market fear, larger banks and institutions are becoming less inclined to predict a severe economic downturn. In September, Goldman Sachs lowered its estimated chance of a U.S. recession over the next 12 months to just 15%. They cited positive economic indicators in inflation and the job market as reasons to believe the U.S. economy may avoid the feared Federal Reserve-driven recession. Many have been predicting market crashes for the past 20, 30, or 40 years. Yet market cycles, characterized by highs and lows, are recurrent. These are the moments to accumulate assets, positioning yourself to benefit when markets become more favorable for investors and traders. Reason number 5. Institutional adoption is increasing. The SEC's move to consider spot Bitcoin ETF applications is a significant step forward. When these ETFs are approved, it's expected that a substantial amount of institutional capital will flow into the crypto markets. There are currently 32 publicly traded companies holding over 241,000 Bitcoins collectively, valued at $6.6 billion. Even NASA has discussed collaboration involving blockchain technology for sending data to the moon. This highlights the growing adoption of crypto on a broader scale. Developments outside the crypto space, particularly in the metaverse and NFT-related sectors, are continuing. Rumors suggest that Apple might release a VR headset as early as 2024 or 2025, potentially driving mass adoption of metaverse platforms. The metaverse is often intertwined with blockchain and cryptocurrencies, with many virtual worlds using crypto as a native payment method or featuring valuable NFTs. If Apple enters the VR metaverse space, it could legitimize both industries, boosting investor confidence. Reason number 7. Innovations continue in top crypto projects. From the highly anticipated Ethereum merge event to smaller projects, the leading crypto projects are preparing for an eventual market surge. While some might believe that interest in crypto has waned, these projects are dedicated and focused, ensuring they are prepared for the next bull market. To sum up, these 7 reasons suggest that the next crypto bull market could be on the horizon, potentially starting in 2024. However, it's essential to remember that crypto markets are highly volatile and speculative, so be sure to do your research and consider your risk tolerance before making any investment decisions. Thank you for watching, and if you found value in this video, please give it a like. Thanks for your support, and see you soon. Peace out.